You ever use a product and just think to yourself, man, I wish I could invest in this company? Well, for most of American history, you legally couldn't. But all of that changed, and not because of some grand plan from Wall Street, but because of a problem with kids' medicine. So today, we're going to dive into the surprising story of how equity crowdfunding became legal and what it really means for entrepreneurs and investors just like you.
All right, so to really get why this revolution was so necessary, we have to start with the old system and just how, well, broken it was for pretty much everyone.
Think about it. For the average person out there with a truly great idea, the chance of walking into a traditional venture capital office and walking out with funding is a staggering 1%. It's always been this exclusive, network-based club that, for decades, has been the gatekeeper of innovation.
And look, that's not me exaggerating. This is a direct quote from Sherwood Neiss, one of the guys who literally helped write the law that changed everything. He knew firsthand that the system wasn't just tough. For most people, it was a completely closed door.
This right here is how crowdfunding just flips the entire script. You're taking a closed, exclusive system and blowing it wide open into a public marketplace. So instead of founders having to give up huge chunks of control to a few big investors, capital can now come directly from their community. You know, the actual people who use and love the product. It puts the power right back in the hands of the creators.
So how did we get from that broken system to a brand new one? Well, it wasn't some top-down government plan. It all started with a personal frustration and one entrepreneur who just refused to accept the way things were. That entrepreneur was Sherwood Neiss. His company, Flavor RX, solved this huge problem for parents by, you guessed it, flavoring children's medicine. He was getting calls all the time from grateful mothers asking how they could invest in his business. But because of these ancient securities laws written way back in 1933, he had to tell them no. They weren't accredited investors.
That missed opportunity, as he called it, sparked this really powerful question. Woody and two of his friends sat down and just asked, what if we could actually modernize these laws? I mean, what if we could create a totally legal way for those mothers, for any regular person, to invest in the companies they actually believe in?
And what happened next was, well, it was kind of remarkable. These guys weren't lobbyists, they were entrepreneurs. They took their simple framework to DC, and in this rare show of unity, it got massive bipartisan support. In just 465 days, which is one of the fastest idea-to-law journeys in history, President Obama signed the Jobs Act. And just like that, an entire industry was born. So this new law created this incredibly powerful economic engine. Let's take a look at the impact it's had, and maybe more importantly, what it means for you, whether you're thinking like an entrepreneur or an investor.
The impact has just been staggering. Since the Jobs Act was passed, over 8,000 entrepreneurs have raised more than $3 billion. And this isn't just venture capital money stuck in Silicon Valley. This is capital flowing directly to small businesses on main streets all across America.
And here's where it gets even more powerful. This isn't just about the money, it's about access. Up to half of all the companies raising money through crowdfunding are led by women and minority founders, groups that have been historically and massively overlooked by traditional VCs. It has truly democratized who gets a shot at building their dream.
So this might have your wheels turning, right? Maybe you're thinking about raising capital for your own idea. And while it's more accessible than ever, it's definitely not easy. But success leaves clues, and there is a clear playbook to follow. The playbook is surprisingly simple, but you gotta stick to it. First, and this is the big one, you can't crowdfund without a crowd. Build your community before you ask for a dime. Second, you need to get early commitments to build momentum. The magic number is about 30% of your goal before you even launch. And finally, you have to communicate constantly. Your investors are your biggest advocates, so keep them in the loop.
Okay, let's flip the coin. What if you're on the other side of this? You want to invest in the next big thing. How do you sort through the thousands of opportunities out there and make smart decisions? So for this, you really want to think like a professional VC. It all starts with the team. Do these people have the skills to actually pull this off? Then look at their intellectual property. What's their unique moat or their competitive advantage? Of course, the market has to be big enough to matter. And critically, is the valuation fair for the risk you're taking? And finally, look for clear milestones. You need to know exactly how they're going to use your cash to grow. But this whole story doesn't end with the Jobs Act. Not even close. In fact, we're just at the beginning of a much larger shift in how capital, community, and companies all interact. The next wave is already building. First up, we're seeing the rise of a brand new type of stakeholder, the investor. It's a term that Sherwood Neiss actually coined.
It's this fusion of an influencer and an investor, someone who not only puts their money into a company, but also uses their social capital to shout about it from the rooftops. I mean, these people are the future of brand building.
And technology is about to pour gasoline on this whole fire. Just imagine companies issuing digital tokens instead of traditional shares, all recorded on a blockchain for total transparency. And then being able to trade those tokens on secondary markets, creating liquidity for investments that have been locked up for years. This isn't science fiction anymore. This is what's being built right now.
So you have to stop and think about it. We've gone from a financial system designed for a world without the internet to one that's being rebuilt for everyone, by everyone, right now. This is a fundamental shift in who gets to create value and who gets to own a piece of the future. The only question left is, where will you fit in? As a founder, an investor, or maybe one of the new investors shaping whatever comes next?